Hello everyone, Professor Christensen here. Today's video is going to take a look at closing entries. So closing entries happen at the end of an accounting period. And remember, the goal is to eliminate our temporary accounts so that they'll have zero balances for the next accounting period. So for example, in the case we have here, this company had service revenue of $199,250 in 2019. So next year, we don't want to add 2020's revenue to 2019's revenue, right? Revenue is something that only pertains to one period. So we want to get rid of that $199,250 and have it be a zero balance before the next year starts. So that's our goal here. So our temporary accounts, the ones that we're going to close, are these. The temporary accounts are revenues, expenses, and dividends. Okay? Everything else up here, these are considered permanent accounts. They all go onto our balance sheet. These are income statement accounts, and then of course dividends, which goes on your statement of retained earnings or statement of stockholders' equity. Okay, so let's get started. So remember, our goal is we want these accounts to have a zero balance. All right, so we're going to close our revenue first. Now, if revenue has a balance of $199,250 as a credit and we want to make it zero, we have to debit it. So here we're going to debit service revenue for the whole balance of the account. Okay? And now, if you remember, where does all of our revenue, expenses, and dividends end up? If you think about your statement of stockholders' equity or you think about your retained earnings, remember that they all go into retained earnings, right? Your net income increases your retained earnings. Hopefully you learned that right at the very beginning of your accounting. So our revenue is going to be closed into retained earnings. So this is to close revenue. Okay? So now our revenue is gone. It has a zero balance. Okay? We had a credit, we have a debit, now it's all gone. Okay, next up we want to close our expenses. Now, in order to close the expenses, what do we have to do? We have to credit them for the exact balance that's in the account. And then we're going to debit our retained earnings. So we're going to debit retained earnings. Now, I don't know how much we're going to debit retained earnings for because it's going to be the total of all of our expenses. And even if you have a much more complicated situation with a lot of revenues and a lot of expenses, the procedure is the same. Okay, if you had more than one revenue, you would just debit all the revenues and then put the total here. So for retained earnings, we're going to debit it for the total of all of our expenses. So if we had 100 expenses, it's the same thing. We're going to close each of them. Okay, so let's start with depreciation expense. We're going to credit that because we want it to have a zero. So remember, it has a debit balance and now we want to credit it. Okay, salaries expense has a debit balance of $115,000. So we want to credit that. And then supplies expense. Supplies expense has a balance of $37.50. Okay, so all of these are going to get closed into retained earnings. And the way we're going to do that is we're going to add them up and then debit retained earnings. So this is going to be the sum of those three numbers. Okay, so remember, when you close your expenses, you don't know the amount of your debit until you're all finished with your credits. All right, and this is to close our expenses. Okay, so we've taken care of, let's unhighlight these because that will show that we're all done with them. Actually, let's highlight them with the dark color because they're all gone. Okay, so service revenue is gone, our expenses are gone. The last thing we have to do is close our dividends. Now, dividends, like expenses, have a debit balance. So we're going to debit retained earnings and we're going to credit dividends. okay, for the balance in our dividends account. And that's to close dividends. Okay, so these are all closed now. All right, they're all gone. Okay, so let's look at what's in our retained earnings now. So remember, when you're in your adjusted trial balance, your retained earnings is showing your beginning balance because it's been sitting there all year. No one's touched your retained earnings since last year. So our retained earnings started out with $75,000. That was our beginning balance. Okay. Now, what did we do to retained earnings here? We credited it for $199,250, and that was our revenues. We debited retained earnings for $143,750. Those were our expenses. And then we debited it for $15,005, and those were our dividends. Okay? So now our ending balance in retained earnings, remember how to find a balance in your T account. This is a credit balance account, so we're going to take our beginning balance, our $75,000, add credits, and subtract debits. And that's going to give us our ending balance. Okay, so our ending balance in our retained earnings is $115,000, and that amount goes to the balance sheet. Okay, so the $115,000 goes right to our balance sheet. Okay, the $75,000 is gone. And now if we were to do a post-closing trial balance, so I'm going to change this. You won't be able to do this because you don't have room for that, but I just want to show you what a post-closing trial balance will look like. Post-closing trial balance, all of these are gone. Okay, and notice we're not balancing. Oops, I can't do that. I'm sorry. All of these would be gone. And then our retained earnings is going to be the ending balance. Okay, retained earnings is going to be ending balance. Okay, so I'm going to leave all that there for 1 minute. So let's do it for a minute. So this is going to be equal to that. Nope, doesn't like that. Okay, so we're going to make this $115,000, and then we're going to get rid of all of these. Temporarily, we'll put them back. And that would be our post-closing trial balance. A post-closing trial balance is everything that's left after you finish your closing entries. Okay? And your ending retained earnings is there, and it doesn't have any revenues or expenses. These are all gone. Okay, so that's how you can tell if you have a post-closing trial balance as opposed to an adjusted trial balance. Okay, let's put those numbers back there for you so you could see them. Okay, all right, so that is an example of our closing entries. Remember, if you have more accounts, you're just going to do exactly the same thing, but you have to do it more times. Okay, all right, I hope you find this helpful in your studies, and good luck in your accounting studies. See you in the next video.